G'day guys, welcome back to the Devon Too Good Investing channel. In this video today, we're going to be analyzing Meta Platform's first quarter 2022 results, and we're going to be talking about what we can expect out of Meta Platforms moving forward into the future. So before we get into it guys, make sure you like this video and subscribe to my channel. So let's just rip straight into the high level financial highlights here. So we can see that total revenue, it grew 7% year over year, which is definitely a lot slower than what Facebook or Meta Platforms has grown at in the past, where they've been growing at 20% per year in terms of revenues over the last decade. So this is definitely a sort of a wake-up call to investors here. Although in saying that, there are some reasons why this has slowed. Obviously, there's the impact over in Russia and Ukraine. Facebook is now cut off from Russia, so they've lost a bunch of users there. Obviously, that's lost revenue. Also, there's been a big sort of product viewing time mix change, where people, instead of spending their time on feeds, they're now spending a lot of time on Reels, and Reels has not yet been well monetized by Facebook. So this is something that they're working on. And this is also why some of their expenses have actually increased quite a lot year over year. So the other reason why the revenue has slowed down a little bit is due to the Apple iOS changes. And the CFO a couple of quarters ago came out and he said that this would have a roughly $10 billion in revenue per year impact. And we can clearly see that it has had some impact on growth. So we can see that cost and expenses here is grown by 31%. This is largely due to a higher headcount, which we'll talk about soon. And actually, if we just talk about it now, there's a little section here that says headcount has increased 28% year over year. So obviously, the higher headcount, the more expensive it's going to be to operate your business. However, I think in the long run, this will be okay, as these software engineers are going to be working on ways to better monetize Reels, build better AI so that they don't have to be so reliant on data. And if they can get away from being reliant on data and more reliant on AI technology, that means they're going to be able to produce better ads. They're going to be able to improve their tracking and targeting with less data. So, that's going to give Facebook, it's going to reaffirm their competitive advantage. And as a result of expenses increasing, it also means that obviously the operating margin must decrease, which we see here. And as a result, this flows down to net income decreasing and ultimately diluted earnings per share decreasing. We can see it decreased 18% year over year. And one thing you might notice here is that the net income actually decreased more than the diluted earnings per share. The reason for this is due to share buybacks, and there's a little point down here that I would like to show you regarding share buybacks. So you can see as of March 31st and the end of the first quarter, Facebook purchased $9.39 billion of Class A common stock, and they also got authorized to purchase another $29.41 billion worth of stock. So essentially, if you decrease the share count, your earnings per share is going to increase at a faster rate than your net income, or in this case, decrease at a slower rate than your net income if your net income is going down. In terms of operational highlights, we can see that family daily active people, DAP, it increased 6% year over year, which is, this kind of surprised me. I thought that they would not increase their daily active people on using their family of apps by 6%, but this is a nice surprise. And we can also see that their family monthly active people also increased 6% year over year. And I guess this kind of debunks the narrative that Facebook are going to be losing users quarter after quarter from now on. Facebook is clearly still growing. It's growing slowly, but it's still growing. So the fact anyone who's saying that it's decreasing, well, just look at their results here. That's all you have to say. The company did guide that they do expect their daily active people to be flat moving into next quarter, and this is mainly due to the Russia and Ukraine conflict. So some of that's going to lap into the next quarter. So do expect some sort of impacts there regarding that. So if you do see this number flat, don't be surprised. In terms of Facebook, yeah, it's growing slower than their other their family of apps. It increased 4% year over year in terms of daily active users and 3% year over year in terms of monthly active users. Ad impressions and price per ad. Well, impressions increased on the family of apps by 15% year over year, and I actually think there is a fair amount of runway here to increase impressions, especially as they attempt to monetize Messenger and WhatsApp. So there's a fair bit of growth there. And in terms of price per ad decreasing by 8% year over year, this is a bit of a red flag. However, there are some very reasonable explanations for this. The first one is being a bigger user attention on Reels, and Reels has not been well monetized yet, and the company were pretty, they came out and said this straight up. And the other reason why is the users in Europe and in the North American region aren't growing. However, the users in Asia and the South Pacific and in the rest of the world, they're growing at a much faster rate. However, these specific regions, they don't, their average revenue per user is a lot lower. So that's going to decrease the average price per ad as more ads are being shown in those other regions there. CapEx, well, they are spending a lot on CapEx. A lot of this is due to them trying to monetize Reels, improving AI, and also flooding some money into their metaverse endeavors. We already discussed share repurchases. Balance sheet's still looking strong, and they got almost $44 billion in cash and marketable securities, and we also already discussed headcount. In terms of guidance for the second quarter of 2022, the CFO came out and he said to expect revenue in between 28 and 30 billion. So this would be a flat year over year growth, and this also accounts for some currency headwinds of approximately 3% to the year over year growth, and this is no surprise seeing what the US dollar has done recently. And obviously, if the US dollar gets stronger, this is going to impact revenues produced in other countries. They also talked about some pleasing results regarding political agreement on transatlantic data transfers. So this does have an impact on their European operations, but they didn't really give us too much details regarding this. But the facts that they're pleased with the progress, I suppose we can take it as a good sign. And in terms of total expenses, they've lowered their total expense guidance, and they've also left the 2022 capital expenditures guidance unchanged. So a lot of this expense growth is primarily driven by the family of apps segment, followed by the Reality Labs, which is their metaverse play there. And as we discussed, this was mainly due to higher headcounts. And one number that they did leave out of their press release, but they had inside their presentation, is free cash flow. And free cash flow is one of my favorite metrics. And we can see that free cash flow year over year did increase. So they did $7.8 billion in the first quarter of last year, and they've increased it to $5.8 billion in the first quarter of this year. So the fact that they're growing free cash flow shows that the business has become more profitable year over year. So this allows them to have more spare cash left over to reinvest back into their business or deliver it back to shareholders via share buybacks, which of course they did end up delivering almost all of this, well, more than this free cash flow amount in share buybacks, as they did deliver about $9 billion in share buybacks. So guys, overall, I'd say, look, it's clear that growth has slowed, but if you compare how they're growing and how you expect them to grow, even if they grow at these lower growth rates, you can still argue that the share price, because it's fallen so much, what you're paying versus what you're getting isn't so bad. The company's still growing users. I think they'll continue to grow users. I think they'll continue to grow average revenue per user. I think they will end up eventually monetizing Reels, and then obviously you've got that you got the chance to win big with the metaverse, although that is very speculative. And honestly, in my evaluations, as you could probably look in my old previous videos, I pretty much valued the metaverse at 0 for now. But guys, I hope you enjoyed this quick little review and wrap up of the Facebook or Meta Platforms Q1 earnings. I'll probably do it again for Q2, so make sure you stick around for that and have a good one.